What is going on, ladies and gentlemen? I hope you guys are well. So what a great day we've been having, and a good week so far. Solid earnings out of Tulio, MGM, Uber, Disney, killing it with the reopening trade here. And so yeah, the markets are looking pretty good so far. Wouldn't you say? So despite the Qs, the SMH, IWM, Dow, all closing positive. All right. So in this video, what we're gonna do is that we're gonna take a look at a couple of wave counts, and we're gonna review the game plan that I have to take trades in individual names and also in the indices. All right. So before we dive into the analysis, consider subscribing to the channel, give this video a thumbs up, and don't forget to hit that bell icon so you'll be notified when I upload the videos. The daily SPY chart. All right. Let's take a quick look at it because we haven't done so in a while, and out of the March 2020 lows, we see that we have been trending upwards impulsively. Right now, we broke above the 200-day period moving average. Let me shut these off for a second. All right, and this was the only time back in June of 20 where we retested the 200-day period moving average. Ever since then, we've just been trending above the 50 and the 100. But it wasn't until here around, well, let's call it November the 22nd, right, when we started the correction, when we started breaking below it. All right, so there was a lot of concerns. Okay, there's a lot of concerns from my part and a lot of other people too, that perhaps the top was in, but Elliott guidelines and Elliott wave indicator that perhaps this wasn't the case, and that maybe we will see further price action to the upside before we actually top in the markets. Okay, so what we're looking at here, guys, is that we see a potential makings of our first impulsive wave to the upside. So we have 1, 2, the potential third, fourth that retested the 200-day period moving average and acted as support. Okay, we also have confluence with previous supports here from July the 29th of 2021 here on September. All right, and now we're acting it as support. Now the question is, are we going to break out? And we're going to continue on higher. So let's dive down to the lower time frames, and actually before we do that, let's review where we are right now with the wave counts here in the daily time frame. So the way we're looking at this, guys, is that we have 1, 2, 1, 2, 3, 4, 5 to complete the third on November the 22nd. ABC or WXY to the fourth wave, which came in at appropriate 23 to 38.2. We also have what we created our trend line, our channeling techniques here, right, which is the technique from the 2 to the 4 to the 3 to potentially find the fifth. So my upside target should, all right, I'm gonna rephrase this, should we have continuation to the upside, which it's looking like at the moment. Upside targets for the fifth of the fifth will come in at 575 to 534 before we start rolling over sometime in the summer. All right, I don't know, I just put this here as reference for myself. But you know, this is the 2-4-3 trend channel technique is a technique that we normally use to find either the third, all right, 1, 2 in the third, or 2, 3 to find the fourth, or in this case 2, 4, and 3 to find the fifth. All right, potential. And then we do extensions in the Fibonacci tool to find the projected moves. Now this is a very conservative fib levels, right? I'm not using the 100% extension. So this extension here, the 618, is an extension from the 1 to the 4, and the bottom one is from the 2 to the 3 down to the 4. All right, which are techniques that we use for Elliott to determine projections. All right, so diving down to the 30-minute time frame. Let's dissect price action out of our November the 22nd high. All right, so that's when we completed the third wave of the fifth of the third, right? Then we have our ABC pullback to the W. At some point, we were determining or trying to figure out if this was an actual ABC, but given the fact that we have 3 wave subdivisions, this is better served as a complex correction. So we have a first W, ABC pullback to the X, ABC down to the Y. All right, the Y came in at a very, very extended 2618, which is 416.86. Now we used these two higher fib levels to determine the zones, and in previous videos we were stressing the fact that this was going to be a potential buy opportunity. Now I know that we've seen price action act positive out of the January 24th low, but in all honesty, guys, this has been pretty much I'm not saying choppy. I mean, we have choppy action here, but it has been very difficult to track. Okay, very, very difficult to track. And so for that reason, labeling this appropriately has been a little bit tricky, because this can still be an ongoing fourth wave correction. Remember, fourth waves are very, very, very hard to track. You won't know a fourth wave is completed until it's a little too late. So being cautious here is what's advisable. Okay, now looking at our bullish count in the SPY. All right, out of our January 24th flow, we ended the wave one with an ending diagonal. All right, so we have 5 waves overlapping: 1, 2, 3, 4, and 5. All right, let me zoom in here a bit because it's a little bit cluster. Let me hide this. All right, so 1, 2, 3, 4, and 5, and then we have our ABC pullback, right? ABC pullback. Now this is a bit extended to the downside. I don't like seeing wave 2 pullbacks this deep. So for that reason, I was hesitant on taking a trade in this zone, although it did serve as a good risk, right? Because we did potentially go here, right, down towards the origin of wave 1, which would have served as an invalidation level or a stop level for us. But I decided to keep a little bit more patient. Didn't make any sense to continue or to try and use some capital on a if type of scenario. All right, so I waited a little bit, and then we got our first wave, our second wave pullback, 3, 4, and 5 to complete our third wave. Now this is a clear impulsive structure. We then get a gap down, and now here's where it becomes a little bit more tricky again. All right, this became a triangle the way we were looking at it in a couple of videos ago. All right, either it was an ABC or it started becoming a contracting pattern, so it became a triangle. So we got our A, B, C, D, and our short E wave here, which we were tracking alive in the Discord group. We then get this gap up. All right, so what I'm looking at here, guys, is that we have a completed wave 4. So where did this 4 come to completion? If we take the low here to the high here, we see that the fourth wave came in at appropriate 23.6% retracement. Okay, just ever so slightly, actually just shy of it, right? I mean, between 23 and the 38.2. So that's an appropriate level to keep our eyes open for, right? And so with that being said, we actually gapped up, and now we're forming the wave 1. Now, what I'm expecting coming into tomorrow with CPI numbers is that we're gonna be expecting a brief pullback. Okay, a brief pullback to the wave 2, which I'm not anticipating it for it to be too deep per se. All right, so anywhere between the 23 to the 38. So 455, 54 is our level to be looking for. Now, you may be asking, is this a position that we should be taking to the upside? And the answer is not quite. I mean, I personally am not going to do it. And the reason is because this is the final fifth of this wave 1. And given this choppy price action for a wave 1, it's not an ideal scenario. Okay, always think about it like this, right? Wave 1s after a correction serves as an understanding, sort of confirmation 1, or the early confirmation for you to understand if you see 5 waves out, okay, out of a correction, and then the actual confirmation comes when we get the 3-wave pullback, okay, which I'm going to show you in just a minute. So we have our first in the makings of 5 waves up. Okay, so that's going to be our first confirmation. Boom, we get our first 5 waves to complete the wave 1. Now the game plan is a little bit later. All right, we're gonna watch this. We have ongoing positions over at Trending Waves. We have ongoing holdings from our long-term portfolios that we took, early last year and so on. So short-term plays will come at this location. Check this out, guys. So after we make our first 1, 2, 3, 4, and 5, we want to see an ABC pullback. All right, to the wave 2. It's around here. All right, I'm gonna tell you guys right now. It's around, this will be the A wave, this will be the B wave, and it's around this zone, wherever this is, on the C wave of wave 2, where we will start building positions. All right, excuse me. And that's because that's an aggressive play. All right, that's an aggressive stance. We take a position at the wave C. Normally it will be at the completion of wave 2, confirming a break above wave B. But in this case, because we are now confirming that it is likely we will see further price action to the upside, it would be ideal to start building positions and then scaling once we move out of the wave 2. All right, guys. So again, game plan is completion of wave 1 sometime in the middle of February. We then, or end of February, then we get our Fed meeting, and then the Fed meeting, something happens, and then we get the bullish reaction out of it. So we wait for a 3-wave pullback to a reasonable support level, and then we go. So scaling in the wave C and scaling a little bit more in the wave 1 of wave 3. All right, guys. So that's the game plan for the SPY. Now take a look at the the bearish count for the SPY, and the bearish count for the SPY is the following. So it's a bit tricky still. All right, same deal, right? We completed the wave 4. Oh, I don't have it here. Yeah, it's somewhere here. Actually, no, we're still on ongoing wave 4. My apologies. So wave 3 completed in January the 24th. We got our 3 waves down to W, 3 waves up to X. Now you may be asking, bro, but wave 2, you know, it's going higher than the origin of wave 1, and that is true. For that reason, remember I told you guys yesterday. Oh no, yeah, yesterday. This was a zone to keep our eyes open for, right? A pullback between the 618 and the 100, and as you can clearly see, the 100% extension is holding as resistance. Now, the best case scenario here, or the worst case rather, is that we do one swing over. That means that we're still in a wave X position. All right, that means that this is 3 waves up in A, three waves down in B, and then 3 waves up in C of X. And now we're gonna look for our first wave 1 pullback. So the point is, we gotta wait to see if we see a 5-wave progression to the downside to break the lows of February 4th, and then we see, you know, if we break the January 28th, and then ultimately the January 24th. When we start seeing these 3 zones be broken, although we will know relatively soon if this is breached, that 443.98 is a zone that is a make or break scenario. All right, guys. So I hope that's clear. I hope that's pretty understandable. Which is why it's a bit tricky at the moment to try to take any trades. All right, because we may still very well be within a correction. All right, so let's take a look at the Qs. Let's take a look at the bullish count on the Qs. All right, so the bullish count on the Qs, suggesting that out of the WX wave, out of the WY wave, which we completed the wave 4. Here, let me zoom into the 1 hour time frame. Okay, here we go. So 38.2, 50%. You know, it's not an ideal that we went deeper in the wave 4, but it's not invalid anyway. So the way we're looking at this, guys, is that we're instead of looking at this as a 1, 2, 3, 4 type of scenario of a regular impulsive structure, we're looking at this as an expanding triangle. And the reason is because this wave 4 fell within the territory of wave 1. Unlike the SPY didn't do that. The SPY maintained its support at the wave 1 and then continue to the upside. However, wave 4 on the Qs closed below it and remained below it. So thus the only alternative view of this as a bullish scenario is the expanding triangle in the wave 1. So ideally what we want to see is that out of this move here, we had a wave 1, wave 2, 3, ABC to the 4th, and now we're looking at 1, 2, potentially the wave 1, the wave 3 has completed. We get our wave 4 pullback, and then our final 5th. All right, this will be confirmed when we break these highs. Okay, so as soon as we break these highs, which as you can see is an area of resistance, wants support. All right, if we go back into the price history, we see that that area is resistance here, support here, now resistance, and so on. Support, now resistance. It was resistance in the wave 3. Please excuse the noise in the background. And then we see our wave 4 pullback here, and then our wave 5 to the break. All right, guys. So I think that's pretty much it. Actually, let me show you the X wave. Sorry, the bearish count. Wow, that was pretty bad out there, huh? Yeah, I just moved, and still the traffic here is horrible. Anyway, so wave 3, ABC pullback, W, X, 50% retracement, 1, 2, still in the X wave. So ideally, we want to see this continue to the upside, but if not, we'll brace ourselves to the downside. Anyway, thank you so much, guys. I appreciate your time here. Subscribe to the channel, join Trending Waves. I'll see you guys tomorrow. Take care.